everyone, welcome to Zylostar. With us, new weekly market update with Mr. Amidian and Mr. Samra.
It's been an interesting week so far. We have consolidating gold due to positive reports on the dollar, but also geopolitical tensions, which should cause the price to go up, but it is not. And a lot of indices are going up, which is raising some concerns from certain analysts, as usually indices go up after interest rates get cut, but now people are just buying. Where is this going to take us?
So this week we got a duality between ISM PMI and also S&P PMI, and on the other hand we got ADP job opening and also NFP, which increased the probability of soft landing. And let's check it what happened in the financial market last week.
All right, everyone. So as usual, let's kick right into it. And I want to start with the dollar index. So the dollar actually has found a very strong support at the level 100.5, or the range 100.5 to 100.2 or something. So it has found a very strong support here. And as we anticipated in the past week, it kept consolidating in this range until it broke above this range and reached to 102.6. So this is actually due to many things, a lot of positive reports coming to the dollar in the past week, and many Fed members speaking of their confidence about the US economy and how it is doing and why they chose to cut the interest rate by 0.5. And yeah, we're technically expecting a retracement to the support level, and from here we might expect the dollar to continue going up as in strengthening its momentum to the upside. All right, so this is about the dollar. Going to the US 100 or NASDAQ, we can see that the buying power on NASDAQ has actually led it to break below this ascending channel eventually. However, because of the demand on that, it has found a very solid support as well at the level of 19,600, and we could see that there was high rejection from this support area to be broken, and the price continue its up momentum after reaching this support level. From here we can see it's consolidating within this range, so we might expect another attempt to break the support of 19,500. So we'll see how this goes. If it goes down to this level, it might be as well a very good time to buy it. So we'll see how that goes by next week. Now, finishing with Bitcoin. Now, Bitcoin has fallen from 66,000 level to find as well again a strong support at 60,000. We can see multiple attempts to break below the level, but it was bought back up, and this is actually creating for us as well this cup and handle pattern. So from here we have two scenarios. Scenario number one, we might see some breakout here due to the pattern reaching the resistance, or we might see some retracement to the support in an attempt to break it once again by beginning next week, from Monday and so on, and then it shall continue its up movement. So that will be it about Bitcoin.
Hello again, guys. So let's take a look about the gold market and the Euro USD market. We'll start with the gold market. As we can see here, the gold is in an uptrend, continuation in up channel. So facing a resistance at 2666, here 2666. So what we are expecting may retrace here to the trend line for our up channel to 2610. Then he will continue up in this direction and may break this resistance from here and go up more and more, and maybe he will reach 2721. This is regarding the gold market, and let's take a look about the Euro USD market. In Euro USD market, Euro USD now is at crucial support level. It may retrace from here, as we can see here in this support level from here. Then he will go to this resistance from here. The price, it was in 1.1196, may retrace to this like strong resistance in high time frame of 4 hours. So this is our expectation. Why? Because also we have a very good trend line and the price now is in upper trend. Plus on that, it is in a crucial support level. So this is the goal of the Euro USD in the future.
Hello everyone, this is Masoud Amidian. I hope you are all enjoying your time just as we are here in Dubai. Let's dive into one of the most crucial aspects of the financial markets, which is fundamental analysis. As always, I would like to begin with a review of the past week. It was rather an eventful period, particularly regarding economic indicators and geopolitical developments in the Middle East. However, we will focus first on the economic data. Last week saw the release of several important US labor market indicators, including the ADP employment report, non-farm payroll data, and job openings. But before those, we started the week with the US Purchasing Managers Index, or better say PMI report from the S&P Global Institute. Unfortunately, the numbers were somewhat disappointing on the manufacturing front, according to Chris Williamson, chief business economist at S&P Global Market Intelligence, which he said that the September PMI survey brought a series of disappointing economic indicators about the health of the United States economy. However, the Institute of Supply Management, or better to say ISM data, told a more optimistic story, raising some of the uncertainties from the earlier in the week and supporting the idea of a soft landing for the US economy. The sentiment was bolstered by other key labor market indicators. On Wednesday, 2nd of October, the ADP employment report was released, exceeding expectations as Nella Richardson, chief economist at ADP, highlighted a stronger hiring did not require stronger pay growth last month, signaling resilience in the labor market. In addition, job openings also came in significantly higher than forecasted, with the previous period's number revised upward. Jerome Powell, chair of the Federal Reserve, retreated early in the week that the US economy remains in the good health, suggesting that a 25 basis point rate cut in the next two meetings, each one of them, better to say, may be sufficient. Capping off the week, the highly anticipated NFP report was released on Friday, with the US unemployment rate dropping to 4.1%, the lowest it's been in a considerable time, while labor force participation held steady at 62.7. The number of employed persons increased by 254,000, with upward revisions to the prior period's numbers. Collectively, these indicators contributed to an upward trend in US market and indices. Across the bond, Bank of England chief economist Upil indicated that while interest rate cuts must be horizon, they will need to be gradual and carefully managed to avoid accelerating inflation. In Asia, Japan's new Prime Minister Ishiba announced his intent to support families and address the deflationary cycle that has gripped the country for over 20 years. On the geopolitical front, the largest US port strike in 15 years ended with a temporary agreement granting workers a substantial 62% wage increase over 6 years. Discussions are set to continue until January 2025. Additionally, tensions in the Middle East have escalated to their highest level since 2006, pushing gold to the forefront as a safe haven investment for many investors. So let's extend the topic and let's review the upcoming week. Next week, on 9th of October, we are gonna receive the official cash rate and also RBNZ, or better to say Central Bank of New Zealand rate statement and cash rate at 5 a.m. to the Dubai time, and later at 10 p.m. we are gonna receive the FOMC meeting minutes, which already we had around 2 weeks ago. And let's see what was the idea of the FOMC members and their outlook for the economy. Later on 10th of October, Thursday, we are gonna receive the CPI number, one of the most vital economic indicator nowadays from the inflation side. We are gonna have it for the United States at 4:30 p.m. to Dubai time, and also unemployment claims, which is one of the most leading indicator in the employment sector. Eventually, on Friday, 11th of October, we are gonna have the GDP number monthly from the United Kingdom at 10 a.m. and later at 4:30 p.m. we are gonna have the employment change for the Canadian dollar, unemployment rate also for the Canadian dollar, and finally we are gonna have the PPI numbers, or better say producers price index from the United States. From the corporate earnings, we are gonna have some big companies next week, or better say upcoming week, and some big companies like JP Morgan Chase, Wells Fargo, BlackRock, Domino Pizza, Delta, and some other big companies like Pepsi. So let's see what will be released from the corporate earnings of the United States. Do not forget, if you want to increase the win rate, or better say the probability of becoming successful in financial markets, always mix fundamental and technical together. The result would be amazing.
Thank you everyone for watching us. Don't forget to subscribe, like, and put us comments.
Yeah,
Let
thank
us
you
for
very much.
next week.
Thank you very much.